Welcome to the Friday edition of Tech Stocks Daily. We've got a jam-packed episode hitting all the top tech titans making waves. First up, we dive into Microsoft's EU antitrust scrutiny and how their cozy $13 billion OpenAI deal is stirring the pot. Next, Google's caught in a €1 billion tax tussle in Italy, but they're also spicing up YouTube Premium and adding Cantonese to Google Translate. Then, we're talking about big bets and spicy ETFs involving MicroStrategy and their Bitcoin escapades. Lastly, Apple dominates with Vision Pro's pricey debut in China and a game-changing BNPL partnership with Affirm. Stay tuned, you won't want to miss this tech-packed roller coaster. All right, tech enthusiasts, buckle up because today's journey is all about Microsoft, apparently a favorite among newsworthy topics right now. First up, Microsoft's $13 billion investment in OpenAI is raising some super serious eyebrows over in the European Union. Imagine an eyebrow raising that could be seen from space. That's how serious we're talking. The EU's antitrust regulators are getting all detective-like, scrutinizing Microsoft's exclusive cloud technology deal with OpenAI. The official concern? These exclusivity clauses might be creating an unfriendly, no-competition club. EU's antitrust chief, Margrethe Vestager, wants to pick the brains of Microsoft's rivals and customers about the potential impacts of this cloudy relationship. Although an official investigation isn't on the docket, these preliminary Sherlock Holmes-esque inquiries could evolve into a full-blown formal investigation if any anti-competitive behavior is sniffed out. Keep your popcorn ready, folks. Interestingly, this regulatory intrigue follows a vivid soap opera-style drama featuring OpenAI's CEO Sam Altman and our dear Microsoft CEO Satya Nadella, who played a pivotal role in the firing and rehiring episode of Altman. This messy plot twist has piqued the interest of regulators on both sides of the Atlantic, with similar queries from the UK and US. The core of Microsoft's and OpenAI's bromance lies in leveraging Microsoft's Azure for the computational heavy lifting needed for generative AI, which naturally spikes the open squares in our cloud usage charts. Switching gears but sticking with Microsoft, let's give a round of applause to BlueVoyant, basking in the limelight as Microsoft's 2024 Worldwide Security Partner of the Year. Not just that, but they've clinched the Microsoft US Security Partner of the Year title for the third consecutive time and the inaugural Canada Security Partner Award. Clearly, BlueVoyant and Microsoft are like peanut butter and jelly when it comes to cybersecurity. Their partnership helps businesses around the world solidify security foundations and maximize Microsoft's security offerings. Impressive, right? And just when Microsoft seemed ready to pass go and collect $200, Russian hackers waltzed in and ruined their day. Microsoft disclosed that these cyber meddlers, who originally snooped on staff emails, also dug into the inboxes of their customers. This revelation, 6 months after the initial breach was revealed, underscores the widespread nature of the infiltration. Cue dramatic gasps and clutching of virtual pearls. This breach added more fuel to the fiery scrutiny from regulators worrying about the security of Microsoft's fortress. Amidst all this sonodram, Microsoft promises transparency by notifying affected users and sharing compromised information. Best customer service under the oops, my bad category. Rounding up this divine comedy, let's not skip the money moves in Microsoft's stock market theater. The options market is buzzing, with big players showcasing a mixed bag of sentiments, split between 20% bullish and 50% bearish. Someone seems convinced that a plot twist is afoot, considering the investment giant's recent price actions. Intrepid traders keep hanging around a strike price range from $200 to $460, while the average consensus from market experts puts a spotlight price on Microsoft shares at an ambitious $548. So there you go, Microsoft holding on to the headlines today with a spicy cocktail of regulatory scrutiny, cybersecurity accolades, mixed market sentiments, and a showcase of generative AI love. That's enough drama to give a tech soap opera a run for its ad revenue. Stay tuned for what undoubtedly will be more plot twists in the Microsoft saga. Hold on to your tech goggles, everyone. Google has been front and center in the news today, and no, it's not just another product release or fun new feature. We're talking billion-euro tax disputes, substantial upgrades to YouTube, the long-anticipated addition of Cantonese to Google Translate, and even more. Let's dive in, shall we? First, let's head over to Italy, where Google's digging into its pockets a little deeper than usual. The Italian Revenue Agency has demanded over €1 billion, or about $1.7 billion from Google in unpaid taxes and penalties. Yes, you heard it right, a billion with a B. This isn't Google's first dance with Italian tax authorities either. Back in 2017, they forked over €306 million following another tax dispute. The current dispute spans a 4-year period from 2018 to 2022 and hinges on Google allegedly not coughing up taxes on revenues generated from its digital infrastructure in Italy. Ouch, talk about a pasta-intensive financial headache. But while Italy's taxing story isn't exactly a Google love letter, not all the news is gloomy. On another front, YouTube is upping the ante with some snazzy new features exclusively for premium subscribers. Forget about just ad-free videos. They've introduced an AI-driven jump ahead button, which essentially acts like a fast forward to the good stuff button. Want to watch only the most lit segments of a video? Let YouTube's AI handle that. Plus, there's a rumor brewing that Google's exploring new premium plans, enabling subscribers to share their perks with friends. Talk about spreading the premium love, huh? Oh, but that's not all. Keeping up with the competition in the tech world is like being in a high-stakes chess game, and Google Translate has a shiny new pawn, or should I say rook in play. To the delight of many, Google Translate now supports Cantonese, thanks in no small part to Google's Palm 2 large language model. This has been one of the most requested languages, especially given the complexities stemming from the fact that Cantonese and Mandarin, while sharing written characters, have unique grammatical nuances. And because we already have Google on a roll here, let's not overlook this crucial feature, a move that should help bridge cultural and linguistic gaps like never before. Cantonese speakers worldwide can now look forward to more accurate translations for text and speech. Kudos to Google Translate for cracking this multilingual nut. So in summary, Google's day had a bit of everything. A tax nightmare in Italy, swanky new features for YouTube Premium users, and Cantonese finally getting its due in Google Translate. Despite the billion-dollar headache in Italy, Google continues slaying in the tech innovation arena. Amid taxes and tribunals, it shows how agility and innovation remain at the forefront of its mission. Keep those binoculars trained, because Google's got 99 problems, but a lack of features ain't one. Stay tuned, folks, because in the world of tech, there's never a dull moment. Hey tech enthusiasts, today's big spotlight shines on none other than MicroStrategy, and oh boy, their news is hotter than a ghost pepper. Let's break down why MicroStrategy is grabbing all the headlines. So first up, let's talk about the market whales making waves with their recent bets on MicroStrategy options. Yeah, we're talking deep-pocketed investors throwing some serious cash into both puts and calls. For all you non-traders out there, these are basically high-stakes bets on whether MicroStrategy's stock will skyrocket or take a nosedive. According to Benzinga, there's been an extraordinary surge in options activities, 42 activities to be exact, which is pretty outlandish for one company in a single day. Investors are eyeing a possible price range between $650 and a wild $3,800. Talk about a swing. It's like trying to predict what Elon Musk will tweet next. Now, the general mood here is a mixed bag, 50% bullish, 35% bearish. It's safe to say these whales are throwing everything but the kitchen sink at MicroStrategy. In pure numbers, the calls sum up to $2,133,088, while puts total $626,520. Whether you're checking open interest or trading volume, keeping an eye on these indicators will help you understand how liquid and in demand MicroStrategy's options are. And speaking of demand, let's pivot over to the juicy news involving spicy ETFs. The T-Rex Group has filed for some sensational ETFs that could take your investment ride from a tepid stroll to a wild roller coaster. Think 2x long and 2x short performance on MicroStrategy stock. The stock is volatile already due to its massive Bitcoin purchase strategy. Imagine what could happen when you double that. Absolutely electrifying. Senior Bloomberg ETF analyst Eric Balkunas hilariously dubbed these ETFs the ghost pepper of ETF hot sauce. He even tweeted they're bound to be the most volatile ETFs ever seen in the US market. This metaphor is mouth-burning, and for good reason. MicroStrategy leverages debt and equity to buy tons of Bitcoin. Sorry, I mean literal tons. And that makes these ETFs highly unpredictable. To spice things up even more, MicroStrategy recently announced plans to issue $700 million worth of unsecured senior convertible notes to buy, you guessed it, more Bitcoin. Right now, they're holding a whopping 226,331 BTC, valuing around $13.8 billion. Let's not ignore that MicroStrategy stock is up 109% this year, powered by approval of spot Bitcoin ETFs. Investors have essentially turned the company into a go-to proxy for Bitcoin exposure. And it's not just them. Other companies have been raiding the Bitcoin treasury for similar gains. So there you have it, folks. Whether it's whales making big bets or T-Rex fueling the spiciest ETFs in history, MicroStrategy is the buzzword of the hour. Keep your eyes peeled because this show is only getting started. All right, tech enthusiasts, let's talk Apple. And oh boy, Apple has been all over the tech news today, causing quite the stir on multiple fronts. So grab your popcorn because there are 3 juicy stories we need to break down. First up, Apple's Vision Pro has finally debuted in China, but there's a twist. It's selling for a whopping 29,999 yuan, translating to 4,128 USD. That's nearly 18% higher than the US price of 3,500. Chinese consumers are having mixed reactions, flooding Weibo with debates on whether the higher price tag justifies the product's value. Despite the chatter, Apple stores in Beijing were packed with fully booked training sessions for the Vision Pro. Major Chinese companies like Tencent, Alibaba, and JD.com have already hopped on the Vision Pro train, integrating their apps. This move comes right after Apple resolved a trademark dispute in China last year, underlining the strategic importance of this market, which accounted for about 18% of Apple's revenue last quarter. Next, let's talk fintech. Apple has teamed up with buy now, pay later company Affirm to offer loans through Apple Pay. Even though Affirm's stock took a dip post-announcement, this collaboration could be a game changer. This move suggests Apple's in-house BNPL service, Apple Pay Later, didn't quite hit the mark, prompting the outsourcing. With Apple's massive user base, approximately 60 million Apple Pay users in the US alone, Affirm stands to gain significant exposure. If you're an Affirm investor, you might not be seeing the immediate results just yet, but this partnership is undeniably a massive opportunity for long-term growth. Affirm is already entrenched in the retail space, working with big names like Amazon, Walmart, and Shopify. So the addition of Apple to the mix could fuel its next big growth spurt. And finally, let's dive into the semiconductor splash. Cirrus Logic, the chipmaker that relies heavily on Apple, we're talking 87% of its revenue, has seen its stock skyrocket by 48% this year. Apple's AI ambitions have a lot to do with this upswing. With Apple planning to roll out AI-enabled features in the next-gen iPhones, the market is buzzing. JP Morgan analysts predict a solid upgrade cycle, potentially catalyzing major iPhone sales, which could mean big things for Cirrus Logic as they supply key components for these devices. The demand for AI-driven features could replicate the boom Apple saw with the 5G revolution, giving Cirrus room to continue its impressive growth trajectory. Now here's where I want to hear from you. What do you think about Apple's pricing strategy for the Vision Pro in China? Do you believe Affirm partnering with Apple can break new ground in the BNPL market? And are you as bullish on Cirrus Logic as a lot of tech analysts seem to be? Drop your thoughts in the comments, spill the tea, and let's get this conversation rolling. Let's zoom in on Apple amidst this whirlwind of tech news. So, should you buy, sell, or hold given today's updates? Here's my take. I'm leaning towards a buy on Apple, and here's why. 1. Strategic market expansion. The debut of Apple's Vision Pro in China at a beefy premium shows Apple's confidence in this market. Despite the higher price, major Chinese players like Tencent, Alibaba, and JD.com are on board, signifying strong institutional faith in the product. Fully booked training sessions in Beijing stores also hint at a promising consumer interest. Remember, China accounts for a significant chunk of Apple's revenue, so any success here bodes well for their stocks. Number 2. Impressive partnerships. Teaming up with Affirm in the buy now pay later sector indicates Apple is aggressively diversifying its financial offerings. Although Affirm's stock dipped, the massive exposure to thousands of Apple Pay users should eventually lead to positive outcomes. This partnership not only opens new revenue streams for Apple, but also aligns with their long-term strategy of enhancing user experiences through financial flexibility. 3. AI momentum. The boom in Cirrus Logic stock, closely tied to Apple's AI deployments, reflects a bullish outlook on Apple's next-gen device features. The move towards integrating more AI-powered capabilities in upcoming iPhones can prove to be a massive sales driver, mimicking the success seen during the 5G rollout. This AI push positions Apple at the forefront of technological innovation, alluring for long-term investment. However, always remember, these insights are flavored with the latest news in my perspective, and the stock market can be as unpredictable as a cat on a caffeine rush. Dig deeper. Consult with financial advisors and do comprehensive research before making investment decisions. There you go, folks. Stay savvy, stay informed, and happy trading. All right, tech lovers, that's a wrap for today's market shenanigans. We've seen everything from Microsoft catching the EU's regulatory eye, to Google fighting billion-euro tax headaches while upgrading YouTube and Google Translate, all the way to MicroStrategy making waves with spicy ETF plans, and Apple shaking things up in China with its Vision Pro debut. So if you enjoyed this exciting mix of tech highs and lows, make sure to smash that like button. Subscribe to the channel and share the video with your friends. Don't miss out. Come back on Monday for another quick, entertaining roundup of all things tech. Have an awesome weekend.